My favorite hack is to have your savings account tied to your overdraft. What do you think about it?
The fear of overdrafts is a super legitimate concern. It gets expensive fast when you have overdraft fees that pile up, especially if you stay negative for consecutive days. And so I think a lot of people kept significantly more of a balance in their checking account than they needed to. Most banks do offer that, where you can link it to your savings account and it can pull over in case of an emergency. I think for a lot of people also, it's just the convenience factor. If you just have one account that everything is going in and out of, you don't have to worry about transfers. You don't have to worry about, building your savings in one and paying bills out of the other. Welcome back to the Money and More podcast. I'm Madison Foster.
And I am Ryan Bowling. Thanks again for joining us on the podcast where we try to make your money make sense.
Yeah. So today we're going to talk a little bit about savings accounts and checking accounts and how much money to keep in your checking accounts. But before that, I just wanted to see how you were doing. We haven't recorded in a while. What have you been up to?
You're right. We have had a little break as we figured out what our cadence is going to be for this podcast, but I've been well. How about you?
I have been doing well. Also, as of recording, it is the dead middle of summer here, and I am soaking up every second of sunshine. I'm already dreading that I'm getting like back to school ads and stuff like that. I just need everyone to chill out a little bit because we're still in July as of now that we're recording. So
yeah, I feel you on that one. Being in the marketing world, especially for a bank, I've already ordered Christmas currency envelopes and we're designing Christmas cards, and it is July, which is ridiculous. But it is a pleasure to be here on the podcast with you again. Are you ready to jump into it?
I am, yes. So like I mentioned, we're going to talk a little bit about different accounts and how much to keep in there. We hear a lot about savings accounts and how much money to keep in those. We have a couple blog articles on our Money and More blog on the OMB Bank website already about how much to keep in savings. But we thought today it would be nice to kind of talk about how much to keep in your checking account and how to know which type of checking account to choose. So Ryan, why don't you jump right in and tell us your thoughts on that just to get us started?
Yeah, so this topic really appeals to me because I am an optimizer. I don't like to keep a lot of excess in an account, knowing that if I could put it in something that earns more interest or works better for me, I would rather have surplus sitting in there. So this topic definitely appeals to me because it explores what you should consider to be an optimal balance in a checking account, whether it's a high interest checking or reward system or whatever it is. It's really about finding what is optimal to keep in your account so that, like we said, your money can work for you. So in the research we did for this article that is up on the ombbank.com Money and More blog, according to the Federal Reserve's latest survey of consumer finances, the average U.S. household checking account balance is just under $17,000. So that's certainly skewed a little bit, especially by some of those high interest checking accounts, because the median for a checking account is just $2,800. And that's a far more realistic snapshot, I think, of where Americans are at with their checking account balances. So to really find that sweet spot, there's a little bit of a formula that we like to use. So first thing you got to do, you got to add up your monthly spending. What are you spending on either your rent or your mortgage? If you have one of those payments, what are you spending on all of your bills and your utilities, your groceries? What's your transportation look like? In this day and age, all of your subscriptions, everything that comes in and out of a checking account. Take a look at that. Add all that up and then add 30%. So why 30%? That's going to give you a cushion. It's going to help you avoid overdraft charges, any surprises. So say, for instance, if you're spending $2,500 in a month, you want to keep about $3,250 in your checking account. That's going to be kind of your optimal sweet spot. So once you've added up everything, add about 30% so that you can avoid the surprises. And that is what you're looking to keep in your checking account. Because like we said, take the excess, put it in a savings. Maybe it's in a CD or a money market, something that earns you more interest than what you're going to get out of your either high interest checking or rewards checking, because those other accounts, they're going to be better performers for your money. So that's the sweet spot. I'll let you chime in. What do you recommend not keeping more than that 30% cushion plus your spend in your checking?
Well, I did just want to reiterate, like you had mentioned, keeping that cushion in there is important. I think a lot of times we see that people either take every extra penny that they have and put it in a savings account, or they don't separate them at all. And that's something I always advise against, because having that cushion is so important so that you're able to still build your savings and your emergency fund, because it is crucial to keep those separate for the sake of organization, for the sake of self-discipline, for just kind of having different accounts for different goals is what's important. So by keeping a little bit of a cushion in your checking account in case your electric bill is just a little bit higher or something unexpected comes up that needs to come from that everyday account, by keeping that cushion there, you won't have to dip into your savings, and you can continue to build an emergency fund, a vacation fund, while also keeping a positive balance in your checking account. So that's really good advice. I think the biggest reason is kind of something you already alluded to, Ryan, as far as why we say not to keep a super big surplus in your checking account, is because 9 times out of 10, you are going to be losing out on interest that you could get elsewhere. Like you said, like a high interest savings account, sometimes money markets, a CD, if you're willing to lock up your funds. All of those are, as a general rule, going to have a higher interest rate than what a standard checking account is. And so by keeping all of your money in there and not placing it somewhere that it's going to earn compound interest, you're essentially just losing money that you could be making. Now, the caveat to that is there are some checking accounts that we'll dive into a little bit later that do have different perks. They do have maybe some bonuses. Some checking accounts are interest bearing, but even still, typically the interest rate is going to be lower. So really it's just kind of doing your research and seeing, like, are the perks or the cash back or the interest rate that you have on your checking account, your day-to-day account that you use for bills and expenses, is that going to be comparable or better to what you could get in like a high interest savings account, or a CD with a high yield? And if the answer is no, then you need to take that money and put it elsewhere. I would still recommend, like I said, to keep them in 2 separate accounts. And that's not to say you couldn't do 2 separate checking accounts, but keeping your savings separate from the money you're using for everyday expenses and bills is really, really important. And it's really helpful when people are trying to reach their financial goals. So that would be probably my biggest piece of advice with that, is just kind of like we always say, just do your research and see if the money you could be earning elsewhere would make it worth it to take that surplus and put it in an interest bearing account that has a higher rate.
Yeah. So if you're like me or my wife, you worry about the cushion not being enough. But my favorite hack when it comes to this sort of setup is, instead of taking overdraft privilege, use a tied savings account for your overdraft. So you can set it up. Most banks probably do this, at least as far as I'm aware, to have your savings account tied to your overdraft. So say you did have something come out that you didn't expect, maybe you just didn't see the bill or something, the bank will actually pull from your savings directly rather than doing the overdraft privilege that comes out of it. So that's my favorite backup plan. What do you think about it?
Yeah, so before I made the switch to marketing, I was in retail banking for several years, and I think there was a few key themes as to why people kept more than what was probably necessary in their checking account, and that was a huge one. The fear of overdrafts is a super legitimate concern. Not only does it not look great as far as your bank history, and banks don't love to see you go in the negative constantly, it gets expensive fast when you have overdraft fees that pile up, especially if you stay negative for consecutive days. And so I think a lot of people kept significantly more of a balance in their checking account than they needed to, just out of fear of overdrafts. Like you mentioned, most banks do offer that, where you can link it to your savings account and it can pull over in case of an emergency, or in case you didn't factor something in when you were making your monthly budget or something like that. I think for a lot of people also, it's just the convenience factor. If you just have one account that everything is going in and out of, you don't have to worry about transfers. You don't have to worry about, building your savings in one and paying bills out of the other. But one thing I will say to that is if you utilize the tools that are out there now, such as your online banking, and set up like recurring automatic transfers, you can set balance alerts so that if your checking account is over what you know you need, it'll send you an alert and then you can transfer the excess to savings. There's a lot of automation and tools out there to make it pretty seamless and a lot easier than I think it used to be when you would have to go in and maybe take out cash and move it back and forth between the two. So that is one thing I would say to those that still do it out of the convenience factor. Is there are a lot of ways to mitigate that and make it almost hands off. And in a lot of cases, you don't even have to really do anything if you get it set up. And especially if your bills are pretty consistent as well as your income every month, it's pretty easy just to kind of get on a system as long as you're planning out your budget ahead of time. And then I think finally, probably what I saw working in retail banking was some people just didn't have the knowledge to know like the money that they were missing out on by not putting it in an interest-bearing account or in an account that had a higher rate at all. Sometimes people just don't think about that, don't realize there are other options. Sometimes there's a misconception that in order to have a savings account, you have to start it with a super high balance. And oftentimes that's not the case. You can typically start a standard savings account that's still going to have a higher rate than a basic checking account. And you can often start it with like $100, $500. So you don't have to start super, super strong if you're not ready for that, but just anything helps so that you can build your emergency fund as you're, keeping your household finances in order. So,
yeah, so that's excellent advice on balances for your checking account. But yeah, given your retail background, what about some key features that you should look for when you're selecting a checking account?
yes, so you will want to look for a few things, and not every account is going to have all of these features, but just kind of do your own homework and decide what's most important to you. But a few things that I say to look for as a general rule of thumb: either no monthly fees or low monthly fees. And sometimes if there are monthly fees, there are options to waive those. Typically, if you enroll in like e-statements instead of having paper statements mailed to you, if you enroll in online banking, different things like that will oftentimes waive some of those monthly fees. And so even if it does come with one, don't automatically rule an account out. See if there's a way that you can get it waived. But obviously you don't want to be paying a ton of money in fees just to hold your money in an account. So look for that. If a balance requirement is a concern for you, or you are planning to use it just to pay bills and it's going to go dip below, $100, $200 every month, then I would say make sure that it doesn't have a minimum balance requirement, because otherwise you're going to be hit with a fee at the end of every month once all of your bills come out. So just make sure that whatever balance requirement there is, if any, is aligned with how much you plan to keep in there at any given time. Sometimes there are fees to take cash out at ATMs. That's not as common nowadays, but one thing I would say to look for is if they'll reimburse you for ATM fees, especially if you use an out-of-network ATM. Some checking accounts offer that as a perk as well, where even if you use an ATM that's maybe out of state, you're on vacation, you forgot to bring cash, and you have to go to a different bank that's not in your network, oftentimes it's like $3, $5, $10 to do that. And some checking accounts will waive that for you, or they'll waive it up to a certain number of times per month. So if that's a concern of yours, I would definitely say to look for that as well. Of course, with any account, you'll want to ensure that you have online and mobile banking as an option. That's pretty standard again nowadays, but just make sure that not only do you have an app that you can download on your phone for on the go, but those things are free as well. And then, like we mentioned earlier, just check and see, even if you only plan to use this as more of an operational account or just for your bills, see if there is an interest rate that you can earn, even if it's just on a small balance. Even a few pennies will add up here and there. Or see if there's a cash back perk, see if there's some sort of reward at the end of the year. Just anything extra you can get as you're just using your bank account as you normally would is obviously a perk, and why wouldn't you? So those are the main things that I typically tell people to look for. And oftentimes you'll find some that'll check most, if not all of those boxes.
Yeah, absolutely. So, all right, quickly here at the end, just talk a little bit about automating between checking and savings, keeping those goals separate. Because I love a good goal. So talk about that real quick.
Yeah. So like I mentioned, it's really helpful for a few different reasons. Organization and self-discipline being the main ones, I would say, to keep your goals all in mind, but separate. So if you I mean, we all have the goal of needing to make sure that we pay our bills and have enough money for groceries and things like that. But then we also typically have a goal for like maybe a summer vacation. Maybe we want our emergency fund to hit $10,000 by the end of the year. Maybe we're saving for a new car. It's really helpful if you can separate those out as best you can. And that's not to say that every single large purchase, like a new TV or a new couch, all has to be its own bank account. You certainly could if that helps you. But just making sure you're keeping the things you're saving for separate from the account that you're spending out of constantly, that will honestly help you reach your savings goals a lot faster. And it'll keep you from accidentally getting confused and maybe taking out of one instead of the other. It'll help with not going negative in either one. But that's another really good rule of thumb that I like to tell people a lot when I was working in retail banking, is just to try to keep those separate and make sure that your savings goals are always separate from like your day-to-day expense account.
Well, you did an excellent job, of course, summarizing the balances and the checking account options. Obviously, if you're like me, it is difficult to keep track of what goes in and out of your account. So take the time to add up what it is that you're spending, and then add that 30% cushion. But Madison, go ahead, give the people a quick recap of what we just talked about.
Yes. So in summary, like you mentioned, just like with almost every financial concept we talk about, it comes down to budgeting. So ensure that you are budgeting for all of your expenses as well as all of the income you have coming in, and then add around a 30% cushion. And that's the balance you're going to want to keep in your checking account. Anything outside of that, try to research and find an account that'll earn you a higher interest rate, and then just kind of set it away, set it aside. And then additionally, like we talked about, it is important to keep your goals separate. There's a lot of reasons for that, but we recommend it, at the minimum, no matter what, keep your checking and your day-to-day account separate from your savings and your emergency fund. So just want to reiterate that. And then additionally, there are a lot of reasons why people just kind of keep it all in one account and maybe don't want to venture out into like a CD money market savings option. But I will just again remind you that there are a lot of tools today, especially with free online and mobile banking like OMB Bank offers, that makes it really hands off. So you can just kind of set up automatic recurring transfers between accounts. You can set accounts as backups. You can do balance alerts, different things like that. And so it really makes sense for most people to have those separate accounts. And we would typically encourage you to do so. And then again, just kind of look for when you are selecting a checking account initially, look for the features that are going to be most important to you. So if you know you're going to be traveling a lot and having to use a lot of out-of-network ATMs, look for one that'll reimburse those fees. Look for some that have low monthly fees at all. Look for some that offer free online banking. Just things like that to make sure that the account that you end up in is suited to you and meets your needs.
Perfect. Well, that's going to do it for us on the Money and More podcast. I say let's get out of here.
All right. Bye, everyone.
Bye.
The Money and More podcast is owned by OMB Bank. OMB and its affiliates do not provide legal, tax, or accounting advice. You should consult your legal and/or tax advisors before making any financial decisions.